Good evening. Welcome to the recap of today. I initially wanted to do another case study on a it was a long trade, but I thought, nah, was the long trade? Yeah, I think it was. But then I was like, nah, let's just do the recap and discuss it in the recap. So let's do this recap price from top down to bottom. Because as we know, we formed a weekly. Oh, this is still for someone else. Let's just zoom in. Where are we right now? So, starting the week off, we instantly took out our previous weekly lows. Uh, yeah, that's basically it. We took out this internal liquidity. Let's go to the daily. Go to the daily. Took a previous weekly lows, took a previous daily lows. We took out this liquidity to the upside, so we are expecting price to move down. There's not much liquidity in this area. Let me just go down to show you or show me. There's not much liquidity in this area. We already took this, so it's either up from here, and if we come deeper, I expect price to break below this low and break bearish because there's not much liquidity over here. But we will get there once price is there. What else happened? What can we see on the daily? So Friday was a strong daily closure. For now, today didn't achieve to come above the previous daily highs. We took the previous daily lows, and if we go lower, we can see the New York Open. We had a strong 4-hour push to the upside. And let me go lower once again, and we can see that we achieved the discount of this most recent bearish range. It will be clean if price takes out this previous daily high, and then we can look for shorts from either this area above here. Let's see. Yeah, we got this 4-hour order block PY. So this can be classed as internal range liquidity. However, I was also looking for shorts from here. Why? Because we got some minor bear structure over here, which is pro bullish and then continue bearish. So this is like a quite decent PY for me, where I was looking to sell from. Unfortunately, or fortunately, maybe we get something tomorrow. But for now, unfortunately, we already came into the PI during New York. That's a bit annoying. It's right. Let's see. This was a nice. I called this one. I will go over it later. 4-hour wise, what else do we see? So we got some wicks taking Asia high, and that's where a short setup came from. After we tapped into that 50-minute fair value gap, that sits over here. We tapped into there, strong close to the upside, however, turnaround and giving beautiful short. Doesn't fit the plan, but nice trade nonetheless. What's this? And then I think it was from here, either from here or from here, we got a long setup. I think it was this 50-minute PY. So let's just quickly get that on. 50-minute. 1-hour wise, what can we see? We can see the price left this wick over here, and it shows, and then this bullish closure shows that the bullish hands were pretty strong. Strong push to the downside, just a wick and a turnaround. So you could look for longs from here, or after breaking bullish with this closure of the candle above this high, we can look for strong buys over here as well, which is what I did, but nothing fitted the plan, unfortunately. However, the direction was right. That's a good thing. Good thing. Let me drink my tea real quick. Never mind, it's hot. Ow. All right. What else is there on the 4-hour? So we got previous weekly highs to the upside. This one is too low, yeah. So we can still achieve premium for this bearish range. Then ideally come above here and then look for sells, but that's no, that's too much, I think. So maybe above 8,000 or 800. That might be a nice area Got the beautiful 4-hour POI sitting over here. However, this was news high, so if it comes here, we gotta be careful that it doesn't just wake out the news and maybe then turn around. Can still look for shorts then above these highs. Yeah, for lows, buys from here or buys based on the most recent structure on the lower time frame. Otherwise, no buys. But yeah, that's literally the only two buy possibilities there are. Now I won't look for buys anymore until we either break above this one. And once you break above this one, we're already quite close to getting to this level, which is only 40 pips, right? Like 50 pips. Yeah, 50 pips. So it could like take 2-3 days to get there. But our price retraces first down into here. So then you get something like taking out, maybe get a reaction from here, then pushing up, get some bearish break, inducing sellers into the market, then push higher, come above here, then retrace into that, and then this moves will be pretty strong. Of course, taking out this high, then inducing sellers into the market. So maybe something like this. Then take out that high, then come down, and then come up. Let's do it like this. Yeah, something like that. That would be perfect. Nice inducement. Maybe even gives a sell set up, but I won't look for sells because of the highs above there. That would be very short sell. Depends on how price forms though. But with previous weekly highs above, just wait for the high and then look for a sell from here. What else do we have over here? So for this bearish range, we have this fair value gap. I don't like to trade fair value gaps right away for a PY. However, 4-hour PY sits there, which basically covers almost the entire fair value gap. So let's mark that out in case we come higher tonight or tomorrow. I don't want to do that tomorrow. So 4-hour PY. Yeah, I'm not gonna mark the entire PY because that's too big, too messy. Got that. What else do we have? We are inside the daily fair value gap, which is another like reason to move up now. Because fair value gap is like for 50% filled, I think. Let's see from this candle. Yeah, it's more than 50% filled. So turnaround would be nice now. Still studying some other stuff right now as well, which I might be able to add to my analysis. Just for understanding, nothing changes to the edge for now, just for my understanding of price. Yeah, so let's dive deeper into price. That was good. That was decent. Share my ideas about that. That's all right. All right. So coming into today, Monday, Asia, we got where's Friday close. Friday close at 21, 422. So this is the open price. This was close price, open this gap. And then we got Sunday close price over here. Yeah, right. Yeah. Hold on, I'm just checking something. If you know, you know. If you don't know, you don't know. What I'm checking right now, but it's pretty interesting. Look at this. Look at support level. Ooh. Ooh. That's pretty interesting, the gap. Hold up, let me share this photo to someone. That's pretty interesting. And that's no coincidence, by the way. Um, 1 second. Let me. Shit, I'm drawing wrong. I have to send this to someone. Where's the eraser? No eraser? Anyway, perfect. Is this the between Friday and Sunday? Interesting. Anyway, it's not necessary, so let's just hide that. All right, so taking previous weekly lows, taking previous daily lows, coming into Asia, forming Asia highs, forming some equals, relative equals. We got some equals over here. We got this high over here, forming beautiful bearish structure on the 5-minute time frame. You could also class it as your 1 minute, but I always like to have. Nah, that's not my 1 minute. There's too many candles. There's like a high probability that price will give another confirmation. And that's not because I want a better entry, but I want more clarity, more confidence in my entry, my trades. Because there are a lot of order flow direct entries over here, over here. Well, that's already 2 trades. Over here, you could get like a small one. All right, but anyway, so we took the previous week lows, previous daily lows, and therefore I was waiting for price to take Asia high and then form some bullish structure. Actually, take this high and then look for longs. And over here, we got the first inducement of sellers taking out this high, breaking bullish, then leaving Asia high unmitigated. And if we zoom in, we can see our first bearish break over here. Ooh, so bearish break using sellers into the market, and if you just fast forward it, there you go, building up liquidity above our 50-minute POI. Perfect. Frankfurt Open. Building up Frankfurt Open is the liquidity for our POI. And then if we come lower, what can we see? Price takes that, gives a long opportunity. However, this is no long opportunity. For the uninformed trader, this is a long opportunity, not for us, because this is our early buyers. Why? Bear structure, bullish break, bearish break. Perfect. Reacts from the London open price as well as this order block that sits above here. So respecting bearish order flow as well, but early buyers nonetheless. I thought there was a trade opportunity, but there wasn't. And then this is where I look for the extreme. Why I choose this 5-minute POI? Well, if we go down here, we actually can see a minor low that led to a high. And then also this low that led to a high. So disruption of lows that caused a bullish break on this high, low, lower high, lower low, lower high, lower low, and a bullish structure. So bear structure turned into bullish. Then we still had this most recent bearish range on from this that high down to this low that gave that sell opportunity over there. That's covered in the case study of today. And then we reacted from this. So confluences wise, we know that, oh, sorry, it's a bit messy. So we took previous daily lows. We took previous weekly lows. We took Asia high, but we know that by taking this liquidity and then breaking bullish, it's less likely that Asia low is going to be taken. We didn't reach the premium yet of our bullish range. Therefore, we did on this one, but that one was expected to be broken because we are selling below old lows and we're selling below previous week lows or yeah, below previous weekly lows, previous daily lows, and we didn't reach premium of this range. Neither did we reach premium of the overall range. So longs were valid setups. Now you can say like, all right, this is not selling below old lows, but we came below and then we broke bullish. So I still class it as selling below or buying below old lows. Sorry, buying. And then this is our trade. And what can we see? We have this. So this 5-minute POI that disrupted the lows. Then we have our fair value gap over there. Was there 10-minute? Nope. So 5-minute fair value gap. And then that's where the entry comes from. And that actually quite fit the plan, but it's too intricate. And I was waiting for this break. I will show you. And it's just personal preference while following the plan. I'm not gutted that I like missed the trade because I followed my plan. You got the high. So your early buys over here, there you get your high, your low, your lower high, your lower low. I don't class this. This is like a minor break. It was a strong break nonetheless, though. And let me check something over here. Yeah, so price by giving that push reach premium of this most recent bearish range. But there's an entry nonetheless after this break. Why is that? You get your order block sitting over here, 65, 60, 56, 56, 56. Sorry, my English was lying. Plus 5 pips is 61. Oh, that's the wrong one. Oh, 0.5 pips, sorry. So 61. Just text you in. Now I want to see something on MT4 real quick. I'm going to check on my own charts. Let's remove the lines. Yeah, so and that low was all right. So on MT4, this was at 55, but I would use this entry nonetheless because we always use the biggest entry. Stops below the low, 2.8, 3.3, and your 1 to 5 gets hit before taking out the early buyers. And by targeting your early buyers, you get to a 1 to 5.4. And by targeting the high, you get to 1 to 6.5. Oh, 7. 1 to 7.2. That's clean. And then targeting this high, because what I said, that was expected to be broke, you get like to 1 to 12. And then targeting the discount of the range, 1 to 15. Oh, damn, 1 to 17. So that's a beautiful trade. I would probably close it above here, around here, or this one, sorry. So that's a 1 to 13, but didn't fit the drill, or it fitted the drill, but was too intricate, way too intricate. Especially, well, yeah, especially with this beautiful structure going on over there. I was waiting for the break and retracement. I was happy with this break. Was like, oh, like oh, nice, strong bullish break, but no retracement. So that's that. That's the trade. And then we have this 5-minute for value gap where I was or QI where I was waiting for, because then we formed a new bullish range from this low up to that high. And there were so someone showed me like he did it like this. Let me show you. So he classed this as his early buyers over here, and I want them always. If I want to enter in this leg down, I want to enter this leg down, then I want to see my early buyers in this leg down, nowhere else. And now actually I see my early buyers, but there was no trade entry nonetheless. Anyways, but no trade entry anyway. So he classed this as early buyers, which is valid, but not for me. Because if I would look for early buyers here, means I want to enter in this leg. And that's my plan. So I have to do what's in my plan and actually see now there are early buyers. Why? So it took me a while to see them actually. You get a high, a low, a lower high, lower low, a lower high, a lower low. There's your bullish break that I didn't see. It's actually bad that I didn't see that. Maybe because it was too far away, because the 5-minute POI was over either the lowest one. I favored the lowest one, but this one was so good. There we go. Taking the wick highs. I think it was a 15-minute even. Yeah. So 15-minute POI. Why this 15-minute POI? Well, we go back to the 1 minute. Actually, not much. That's why it was the reason why I was favoring these below the one below here. Because that one at this as liquidity, although it's what's the distance? 6 pips. That's all right. So there's yeah. Well, actually, if you class this as a break, then this is a disruption of the lows, and that led it to that high, led to that high. But then, anyway, pricing lower high, low, lower high, lower low, lower high, lower low, lower high, lower low, bullish break, and again, no return to discount or to entry. And let's check another feed real quick. No, okay. That was a short trade, by the way. And then this is where I caught the market. I'm the market maker. So no early buyers on the way down and no break of structure return to order low. So nothing here. Yeah, we covered that. And then this is the magic. I think people would try to sell here. 100%. Breaking above New York highs. And then bearish break and people, yeah, 100%. You can even see the reaction. People will try to sell here. And they just get demolished. Why? First of all, there's no early sellers. And price is just inducing sellers into the market by taking this high and then waiting for this high to break. So not breaking that high, inducing sellers by breaking bearish. And let's see if we can verify that, like with the 50-minute candle as well. Slowdown candle. People think doji. So retail traders. I don't care what trader you are. However, I just try to look at it from different perspectives. So retail traders will try to sell here as well. Then what other reason do they have to sell here? To support and resistance from this candle closure all the way to there. Beautiful key level, by the way. Look at it. Great. Taps in, taps in, taps in, goes up right now. Might now break below or even respect it, break bearish, and then gives an entry. And then people will try to buy, and retail traders will try to buy, put their stop somewhere here below this candle. Maybe trade 1 to 2. So 1 to 2 would be here. 1 to 1, 1 to 2. That's kind of what most traders trade 1 to 2. So even if you trade 1 to 2, so you want to get it above here. Let's say it breaks bearish. I'm gonna leave this on, by the way. It breaks bearish. They think, oh, and then they get a wick. Respects somehow this area. Although this is not strong, this is horrible. But let's just keep it on. Let's see what happens. This is stronger than this. It might break bearish. No liquidity in this leg either. So beautiful to break bearish. And then respects this key level / support. Retail traders will buy, and then it will respect something here, and then continue down, and then they get taken out. This is all recorded. That's great. I hope I can call the market again. I call it here. Call it here. So yeah. Now during New York, are there any setups? So as we said, the long setup didn't give me anything, and short there's nothing either. It's just building up liquidity over here. Oh, building up liquidity over here. Got something here that's not much, not relevant. Stock market open price, that's over here. This is stock market open price. That's no, not much. All right, let's close MT4 by the way. Don't need that. So yeah, we got some liquidity over here as well. And actually, we can remove this one. We can remove that one. Let's remove it. Sorry. Let's keep that on. Let's remove this. And we have now a bullish range for now. From that high, that's that low. If we expect this bearish range to hold, we don't care if it comes into the discount and then retraces because we expect it to break bearish then. Maybe take out these lows over here. Huh? What? Oh, maybe take out this. So that's also possible. Sorry, I was just getting straight. Yeah, I think there's not much to cover. We took out, did we take that? Just about. Let's see if we took that. I think we did, but like with barely, yeah, barely. So you might see price come even deeper. As we know, we still have these previous daily highs above here. Let's remove this. Actually, that's interesting. Is there a 50-minute maybe? So that one is just mitigated, but 5-minute isn't, and it disrupts these highs. Or has a strong push to the downside. Yeah, I'm interested in that 5-minute POI. Not for direct entries, but maybe for a confirmation based entry. And otherwise the 4 hour, oh, it sits within the 4 hour POI. Ooh, that's perfect. So let's see what tomorrow brings. Peace out.